Hello everyone, my name is Aaron Infinger, COO here at the Cleary Company Remodel Design Build in Columbus, Ohio. And today Natalie Moore has stopped by and she's here to talk with us about financing options when it comes to working with clients on either a remodel or a new build on their home. The Cleary Company celebrates 30 years of service this year, and one of the things that's always been really important to us here at the Cleary Company is to be a resource for our clients from an educational standpoint and make sure that they understand and have all their questions answered when it comes to how to approach one of the largest investments that you might make other than building your home or to buying your home. Working on it, having a remodel is going to be a very large investment. So there's a lot of things to go into figuring out exactly the best way to go about that for everyone. And so today, Natalie Moore stopped by, and we're going to talk a little bit about some of those options, some of the financing, and how to kind of think about it and go about it, because everyone is unique and everyone's needs are different. So welcome, Natalie. Thanks for stopping by today. And why don't you tell us a little bit about your background in the industry?
Yeah, sure. Well, thanks for having me. I've been in lending now for over 20 years with a specialty and niche on construction and renovation financing, something that I absolutely love to do.
Okay, and you're part of the women and professional women in building. Tell us a little bit about some of the exciting stuff that's going on in that. I've got a couple of daughters, and they're both sort of working in the industry right now, which I'm super proud of. But tell us a little bit about some of the interesting stuff going on.
Yeah, absolutely. So the Professional Women in Building Council has been around for over 10 years. I'm one of the chartering members of it, and it's a great organization. It's part of the BIA of Central Ohio, and there's a group of us that get together and we host events. We have speakers come in to talk to us about the latest and the greatest within the remodeling and building industry, and we welcome women from all different backgrounds and professions, and if they're interested in getting involved, we'd love to have them.
That's fantastic. That's great. And so tell us about your new role over at Huntington.
Yeah, so hard to believe, but it's been almost a year. So I'm still doing the same thing, just focusing on residential lending for clients who are looking to either build new homes from the ground up or work on those remodel projects.
Okay. Well, you know what, as someone's beginning to think about their remodeling project, and we know from being firsthand working with the clients that so often people have been planning this for a really long time because it's a really large investment. And so when they are beginning to really look towards pulling the trigger and starting the process, what are some of the things that they should start thinking about when it comes to financing, and how early is too early?
Yeah, so I tell everyone it's never too early. Most of the clients I work with, it's not just a 30 or a 60-day process. We start out early on. Sometimes we work together up to 2 years before we actually, close on their construction loan or a home equity line of credit, just depending on what their needs are. So I tell everyone, you're never calling me too early in the process, because again, whether it's a small project or a large-scale renovation and addition, there's a lot that goes into that. So start the dialogue sooner rather than later.
So when that dialogue begins, what are some of the things for the pre-approval process, or just so the folks could start to begin to prepare themselves financially and just kind of getting their head wrapped around all of it?
Yeah.
What are some of the important things to think about?
Sure. So it's not really unlike any other type of mortgage, whether it's a purchase or a refinance transaction. We're going to look at their income, their assets. Credit's a big thing. Credit's really going to play a role in what type of an interest rate they get. So I tell folks, again, that's part of that whole, it's never too early to start that conversation, because you don't want to have any surprises, once you're ready to go forward with it. Let's look at it now. If there's anything that we need to work on early on, great, let's do that now, so that way we can get you to that point where you're ready to, close on your financing to start your remodel project.
Wow. So again, as they're beginning to sort of think through the different nuance and all the different parts about it, are there projects that are too big, too small? I mean, is there what range do you typically work with clients on?
Yeah, sure. So that's going to vary from lender to lender, just depending on their program. But with the programs that I offer, I've not had anything that's too small. Even if someone, maybe they're a first-time home buyer, they got into a house and maybe it just needs new flooring, we can work with them on that.
Oh, wow.
To the folks who maybe they've been in their house for 10 years, they've never done any improvements to it, and they love where they are, they love their neighborhood, but they need more space. So we're talking about a whole house remodel and an addition. That's not something that's too large for us to handle. And then of course you've always got the ones that, hey, we just want a whole new house.
Yeah.
So you might tear down what you have and start from the ground up. So no project is really too small or too large for what we can handle at Huntington.
That's great. We've worked with people on all of that. We're working on a project right now over in Clintonville that we worked through the remodeling process, or the design process for the remodel, and the client got to the point where we were like, it's become so expensive. Maybe the option here is to tear it down, because you're still going to have 8-foot walls, and if you wanted 9-foot walls on the first floor or something like that, you're still stuck within those parameters of like the existing structure. So that's interesting, and that's a great option, because we have done it a couple of times. It doesn't happen really often, but we have gotten to the point where it just made more financial sense to tear it down. So with that sort of in mind, what are some of the different products that you guys offer, or some of the different things that the specifics of what those products are that you guys can help folks out with?
Sure. So a lot of that, again, is going to depend on the scale of the project, as well as someone's equity position in their home.
Okay.
You can start out with a home equity line of credit, which is also known as a HELOC. Mm-hmm. That's going to allow you to borrow the money that you have built up as equity in your home based on the current value. Sometimes for smaller projects, or someone who owns their home free and clear, does not have a mortgage on it, that's a great opportunity to consider. For those larger scale products or projects where maybe somebody has only been in their house for a year, they don't have a lot of equity, a full-blown construction to perm renovation loan will allow them to finance those projects, and it'll use the as completed value of the project as opposed to your existing home's value. So for example, if your house might be valued at $300,000 now, but maybe after the work is done, it's going to be valued at $600,000, we'll use that to determine the financing. So it really depends on, how big the project is and how much equity they have. And it's going to vary from, client to client on what's best for them. Yeah,
because if they don't, with the way that the home values have been increasing over the last 4 to 5 years since the pandemic, there's been a lot of room for those HELOCs. So I know a lot of people have gone that direction. But at this point, someone that's getting into a home and maybe they're on the other side of that evaluation where the homes have increased in value, and so maybe there's not the value for the HELOC. That's great to know that they have that option.
Yes.
Even if you don't have the equity, you still can do something, right?
Exactly.
You still can move forward with that project and that dream. So, what are some of the pros and cons when it comes to some of these different products? Maybe it's the first time they're hearing about some of these different things. Mm-hmm. So the HELOC, what's some of the benefit of that, and maybe what's a con for it, and then also contrast that with the actual loan for the value.
Yeah, sure. So with the home equity line of credit, one nice feature about that is you're only going to pay on the money you borrow from it. So for example, if someone just needs maybe $50,000 for a bathroom remodel, maybe they only need $10,000 to start out to fund something. They're only going to pay on that $10,000 and so on. It allows them to also keep their existing mortgage in place, so they're not having to refinance their entire mortgage that they already have. So that's a pro of the home equity line of credit. Currently with interest rates, you're going to have a higher interest rate on that home equity line of credit versus the construction renovation loan, you're going to have a lower interest rate. So again, it just really depends where clients are and where they sit with their current mortgage financing as to which is going to work better for them. On that construction renovation loan, again, one of the pros is the fact that we can use that end value as opposed to having to use and be limited to their current home value. So that's another nice plus for that. It allows them to, roll everything together as opposed to doing it in smaller stages too.
So after hearing that there are, the different types of products that were available and sort of the different rules that are associated and the different interest rates, sounds like there's a lot going on there. It really makes it clear that the best path to do is to talk to an expert about it, someone like yourself who can help clients work through the specifics of what works for them. right? I mean, maybe speak a little bit to that about, how your process is that you work with individuals and that sort of vetting process to make sure that you're helping find that right fit for them for a financing option.
Yeah, sure. So again, it's what's right for one person is not right for everybody. So if somebody needs a small home equity line of credit, we can help them with that. Or again, if they need that full scale construction renovation loan, we can do that. And again, with interest rates, we've seen them be really low, we've seen them go up. Where they're going to be in a year from now, who knows? But again, having that conversation early on is just really going to help someone to understand, this is where you are today with what you have, here's what we can, put you into. And again, it's, whether it's a small project or a large scale project, we've got everything to fit their needs.
Fantastic. So I'm a client, I'm out there, I'm thinking about it. I need to get in touch with someone. Where do we find you, Natalie?
You go to the Cleary Company and ask them for my contact information. No,
of course.
My cell phone is always the best way to reach me. 614-264-4154. You can call me or text me, whatever works best. You can email. I'm on social media, so like my Facebook page. But yeah, always happy to answer questions. And I'm not a Monday through Friday 9 to 5 banker, so if you have questions on the weekend, you can reach out to me as well.
Sounds great. Sounds great. So what we'll do is we'll put some of her contact information up on the screen for you to be able to reach out to Natalie. But like she said, if you do have a question, reach out to us at the Cleary Company. We can easily make the connection for you guys. So thanks for tuning in. Thanks for watching. And with all your questions, just reach out to us and we're happy to help.